Let's say
Yeah.
you do remove negative gearing or you're restricted to two properties. What's the first thing that happens? Well, investors look at their portfolios and they look at the assets that are bleeding the most cash.
Yes.
Negative gearing or not negative geared, like, if you can't claim it or you can claim it, you're still losing money,
Yeah.
essentially. So if you've got a property portfolio and you've got two or three or four properties, whatever it is that are negatively geared, they're bleeding cash. So you might look then to cut those assets out. And what assets are they most likely to be that are going to be negatively geared today? They're going to be your more unaffordable assets.
Yes.
Properties under $800,000, especially if you bought a few years ago, I doubt you're negatively geared, or I doubt you're bleeding cash
Yeah.
from these deals for sure. If like we've been buying in some of these locations and prices have doubled, but when we were buying them, rental yields were about 6%.
Yeah.
So they're not negatively geared properties today. So again, the more affordable market is not even impacted, or most likely
Mm.
not impacted by this change. What really is impacted is properties maybe above 900 to $1 million, above that price point, especially for example in like blue chip Sydney or blue chip Melbourne, even now blue chip Brisbane, and they would be bleeding maybe 35 to 50 grand a year. And obviously, your more wealthy investors, people that you're managing their incomes and their tax strategies, they're leveraging their negative gearing as a strategy to offset that.
Yeah.
But they might already have a portfolio, in different structures, like a trust structure or something that's, fairly cash flow neutral or positive. So what's going to be impacted again is your more unaffordable range of properties. So every time you've seen any changes to negative gearing or similar type of policy changes, the market as a whole has declined maybe 2 to 3% as a maximum across the entire Australian market. That
Mm.
doesn't mean every suburb declines 2 to 3%. That means
Mm.
from a median price point perspective, the market declines slightly. And what drives that? More unaffordable market and suburbs,
Yeah.
because they have a large influence on those median numbers. And why do they decline? Because obviously investors let them go because they can't get the same tax incentives back. So
Yeah.
the more unaffordable market here is at quite a high risk this year, as we can see, because if this change does come through and rates are rising and our negative gearing policies are also kind of, taken away from investors, people will be selling those properties. That's
Mm.
a fact. So
Mm.
this is even more crucial today to understand, not just affordable in terms of price point, but relative affordability. So, an unaffordable property in Townsville is very different to an unaffordable property in Sydney.
Yeah.
They don't have the same price points, they don't have the same fundamentals. So we need to understand different metrics, different markets, because at the end of the day, the market is on hard mode investing today.